right, welcome to the next podcast episode. We're planning to chat about blockchain, tokenization of assets, AI, which sounds like something from the future. And our guest today will argue otherwise. The mortgages on the blockchain that use smart contracts are already here. Blockchain is already a part of the loan life cycle and servicing for some of the funds that I was pleasantly surprised about. About a year ago, I met Fred Matera, who is the CIO of Redwood Trust, at the Fulton Lockheed conference. I was very intrigued, and Fred mentioned that Redwood Trust already securitized over 6 or 5 billion of mortgages on the blockchain, and they use liquefied mortgage who is a company on the leading edge of blockchain. So to tell us more on that, on the blockchain itself and the whole market, I'm really thrilled to welcome the founder of and the CEO of Liquefied Mortgage himself, Ian Ferreira. Ian, welcome to the podcast.
Thanks, Alex. Thanks for having me. Appreciate it.
Absolutely. So let's start with just a quick introduction of who you are and why did you decide to start a blockchain company. I mean, you were a successful portfolio manager on Wall Street, and all of a sudden you give everything up and you decided to start a blockchain. Tell us more about how you started and what made you change the profession.
Sure, absolutely. So as you mentioned, background is on the investment side, mostly trading non-agency mortgages and asset-backed securities. So while I come from the investment side, I do have a technical background as well. So I built a lot of risk systems and trading tools at the hedge fund and previous firms as well. And when I left the hedge fund in 2015, I started doing some research on both machine learning, AI, and blockchain. And 2016, 2017, I really started to dig in and play with blockchain myself, just from a technical interest, not really with any home for the technology. And really, once I started dealing more with blockchain and started building on different blockchains, I realized this technology could help solve a lot of the problems I saw on the trading side with respect to data integrity, lack of transparency, cash flows not tying out. Really a lot of the operational side of even reporting, operational side of trading, but also managing loans, right? And so when I created the company in 2018 to really use the technology to fix a lot of those problems, which I'm sure we'll get more into.
Yeah, it's interesting. So first, let's go from the basics, right? Let's define what the blockchain is for the mortgages or I guess other liens. Because a lot of folks mix up blockchain with the cryptocurrency, which is wrong. So can you just give us the definition of what the blockchain is for mortgages and why would one want to use it?
Absolutely. Yeah. I think it's a great question. So, I think it helps to take a higher level step back and say, what is blockchain, at its base level, right? I won't get into the technical side of it. That's not as important, but really what blockchain is, it's a set of transactions recorded immutably over entire life of an asset, potentially, right? So you think of that as a way to prove the history of something. That could be anything. And so what we've done, and we are absolutely not involved on the crypto side whatsoever, but what we've done is we've used this technology to be able to create essentially digital assets that represent a traditional loan. So we take a normal loan, we onboard that by creating its own digital asset, and that loan then has you can actually add information to it. So you can add data, you can add documents, you can add payments, you can add really anything to that asset. And the whole point of doing it, back to the set of immutable records, is the biggest problem we have in the mortgage industry, but also across fixed income, is a lack of trust, right? And the lack of trust between counterparties, the lack of trust between loans trading or servicing transfers. Really, anytime a loan changes hands or something changes on that loan, you basically have to go back and re-verify everything. So every single time, we're constantly re-verifying everything over the entire life. And what blockchain brings is the ability to create records that are immutable, that you can go back and prove certain things. Instead of re-verifying, you can just go back and prove something. So like if I say my FICO score is 700, if the originator said my FICO score is 700, I can go back and prove that the originator said, this is the FICO score at this point, and this is the person, this is the user that added that information. We can go back and prove all of that because the entire history of a loan is captured immutably, and by the way, it's replicated over many users or many firms that are contributing to that network. So really, what a blockchain is, it's a network of people that are contributing to the network, and everybody can confirm certain information. You can prove certain information, and that's really what we're using it for, is to get rid of the constant re-verification of data and documents, at least for now.
So in my limited knowledge of the blockchain, um, they operate in the smart contracts, right? So, and there's so many questions I have for you. So first of all, the difference between different uh, blockchain technology, Ethereum blockchain versus others. What is the difference? And in my mind, smart contract is really, call it a database of provable elements or data fields with the key, which is really a hash, right, to open that database up. Is that accurate, or you would sort of rephrase what I said?
Yeah, so let me start with a different blockchain. So
Yeah.
people ask us all the time, what blockchains are you on, and why are you on those? And my answer is different blockchains are good for different purposes, right? So some are very only transactional, some have the ability for smart contracts, as you mentioned, and really we've done a lot of research on all the different blockchains and said that these are sufficient. Like the two we're using right now are sufficient for what we need, and that goes into one area of focus we're using right now does not need smart contracts. So if we're just reporting payments, that doesn't matter. Um, if the uh, on the smart contract side, so the way I teach a smart contract masterclass, the way we think of smart contracts are they're basically computer programs that sit on the blockchain, and what that means is you can, to your point, you can add data, but you can also have functionality. So we can actually build functionality into the loan itself, which is massively valuable from an operation standpoint, number one, but also permissions. You can build permissions into a single loan asset. So basically saying who can interact with that asset. So we think of smart contracts as data plus functionality, and we can continue to add to that functionality over time as we need to.
Okay, and let's comment on the keys to open the smart contract, right? You mentioned that there are a few people that have access to it. How do you define it? How do you get permission? Um, you know, what would be sort of the technical definition of those people and who has access?
Sure. So the way we've set it up is we can allow certain counterparties to contribute into these loans. So whether that's the servicer, the originator, the investor themselves, a diligence firm, for example, really anybody that touches that loan over its entire life has permission to add information. And so what we do is we actually build that. To your point earlier about the smart contract, we build permissions into the smart contract saying, if some random person tried to put information into a loan asset, they don't have access. They don't have the right account. They don't have the right keys. They can't actually add that information, and they'll be denied. And the way we've set it up, it's also the same with retrieving information, right? So if I'm pulling data or I'm pulling a document, it's exactly the same thing. If you don't have access to that loan, you can't access any information. So we've really locked this down at the asset level. So not even through our user interface or anything else. It's actually sitting on the permissions are sitting on the blockchain itself. And we obviously we help manage that.
Understood. Now let's think about this. So when we talk about different assets, we talk about the paper, right? Borrower executes documents. It's all paper assets. We send the uh, collateral file for the closing docs to the custodian, and then let's see, to create a blockchain right now or the smart contract, we really have to take all the data from that file and then move it to a smart contract while doing it, verifying that this is a source of truth. So going forward, the data is sort of retained and maintained as a part of a blockchain contract. Is that accurate description?
Yeah, that's correct. And one thing I would say that's just to clarify something is when we onboard assets, we can onboard over the life of the loan. So we don't care if it's right after origination or if it's 15 years seasoned. But what we do need is we need a verification point, right? So we're not somebody that's actually going in and verifying information. And so whether that's one of our partnerships right now, we're doing this with, or a diligence firm, for example, could also do the same thing. Really, what we're trying to do is we're trying to take that data, underwrite that file one time instead of every single time it trades or every single time servicing is transferred. Underwrite it one time, get all of that information into the asset itself on the blockchain. That way, we can prove at any point over the life of the loan, then forward, that information has already been verified by whatever the source might be.
Okay, so that makes sense. So if I take the data extraction, populating the smart contract, and now you said it's provable. So in other words, I have the coded link to something, either to the documents or to the place the data exists, and anybody who has permissions to view the smart contract can unlock the document, take a look at the data, verify its origin, that it's true, and then that can be done at any point, correct?
That's correct. Yep, that's correct. Yep, and that's what.
Okay.
What we've done on our side is we've actually built an entire API suite that deals with the assets on the blockchain. So if you use your API to access our API to access the assets on the blockchain, we're also doing a double verification that you have access to that asset. So when we, for example, if we wanted to prove a data point, we have in our UI or in our API, you can say, go verify this data point. You submit the data point. We go out to the blockchain to that exact asset, check for the data point, and return it. Tell you if it's true or false, if it matched or if it doesn't exist, or if it's on there but it doesn't match.
Understood. Okay, so that really helps. So now we can imagine that it's a smart contract with, let's say, a set of fields that are verifiably to be true, and anybody on with the right permissions can verify it. Now, let's talk about addition of the data to the blockchain, and let's bring some examples of what type of things will be added to the blockchain. And does the key change because the data changes? You have a different hash, or the key stays the same? Can you comment on that, on some of the examples of what other data entries will become a part of the contract, and does it change the access points for all the users or people with the permissions to access the blockchain element?
Yep, that's a great question. And I'll start with the fact that the way we see our role is we are the counterparty that helps you interact with your loan assets, right? And so if you're submitting a data point, that you're submitting that data point through our API or through our UI, but mostly through the API, and you're able to post that data, right? And if you add data, and this is something I want to clarify because I've had this question quite a bit, where people say, okay, if I have this example before, my FICO score is 700, right? So I submitted that data at one point, right? And so I did that. Let's say somebody else from my firm comes in and says, no, if that was a different document, it's actually 720. So they go in and they submit FICO 720. Well, most people say, well, the blockchain's immutable. You can't change that. Well, it's blockchains are immutable in history, right? So all the history is maintained. That doesn't mean you can't update a data point. So if I can so you can actually push that same FICO 720 data point into the digital asset, and what it's going to do is it's going to overwrite the 700 data point, but it's that entire history is going to be tracked. So I can go back in that smart contract and say, give me the history of this data point, and you can see the person that changed it, you can see the data point that it changed, and any fields that may have changed. So it's important to mention, because I do get this question all the time. People don't realize, even though a blockchain is immutable, certain data points can be changed. That's a good thing, because you can track those changes and you know exactly who did whatever change at whatever time.
But who does oversight on who is right and who is wrong in blockchain in your example, right? So in other words, I have the initial FICO score is X. Somebody came in and said it as Y. You have a history maintaining, who did what. Is there an oversight to a degree, or I guess an admin party that settled this mismatch?
Yeah, so ideally we have that verification process up front, right? So whether
Yep.
that's a validation partner, or whether that's a diligence firm, somebody is going through documents, somebody is approving, or basically validating that is the correct value. And another thing we're doing is we're also storing the document that data point is located in on the blockchain as well. So we can always go back and check, is that document, does it still exist? And is that data point really in there?
Okay, that makes sense. And now, can you comment on the change to the hash or a key if the new data points are added?
Yeah,
If,
so if
if
there,
it's not happening, or is it, let's say it's pretty much fixed. The key is fixed, and it's a hash that you plug in to unlock the smart contract.
exactly, yeah. So the hash, the key is fixed. The value can change. If you add a new data point, that's a new key, obviously, with a new data point. So, but yes, but the beautiful thing is all of this is tracked. So we know certain things are changing. We know if certain things are added to a contract. It's and that's really the value, is being able to track the loan asset over its entire life.
Understood. But who maintains or okay, let me rephrase the question. So if I'm the investor and I have access to the smart contract, you issue the key to me for that particular loan, and the key looks like a hash. And do I keep it in my wallet, or how do I track the changes of that key?
So that's exactly what we built the RAP asked me to do. So you hit one of our endpoints to say, give me the history of this data point, and it'll give you the history of, or a document, either way, and we will give you the actual history. But that's all technology on our side. And we're making it easy for you to submit to the asset. Hey, does this exist? And has it changed?
Okay, understood. Great point. So in essence, I think I can visualize the way it can be implemented in let's say capital markets. So let's cover that, right? So let's cover the market overview and the players and the success rates, and actual implementation of the blockchain technology in today's market. So can you give some examples on where the blockchain sits and how it helps?
Sure, yeah, absolutely. And I'll say right up front, there are not a lot of people doing what we're doing. They're small. Well, there's very small group of us out there that are trying to implement blockchain technology in mortgages, but also in fixed income generally. And we all have very different approaches, right? So we're taking the approach we're taking, at least for right now, is trying to get rid of the re-verification of data over the entire life of the loan. That's where we're starting, right? And whether that's payment histories or whether that's data or docs, that's the pain point we're trying to get rid of. Eventually, we want these to be tradable assets, right? We have a whole map of what we want over time, and all of these relate to helping capital markets, helping loan holders manage their portfolios. And one of the biggest problems, I mean, even something like reporting on a portfolio is not always straightforward. But if you're pulling blockchain data, it's all standardized, right? So I don't care if you have multiple assets that look very different with multiple servicers. When we put that information onto the blockchain, it's standardized. So even reporting becomes easier. And so these are just all small problems that we're trying to help solve in capital markets.
Understood. And that makes sense. If with my experience, you spend over $500 on diligence providers to look at the same documents over and over and over again, while you can really do it once, report it in the blockchain as a trusted, I guess, element or token, uh, and then you don't have to redo it again. So that's, I guess, point number one. And point number two is for the hard to move assets, right? It becomes a very easy tradable security, right? So the security itself not only can be traded by itself, but you can do partials, right? So in other words, you can split the loan into multiple investors and sell it to multiple investors, and it really becomes a very interesting, easy technology. And I think there's a premium on the market for that.
Yeah, exactly. Yeah, and we are not there yet. As the tradability of the assets, I wish we were, but um, we think that will come eventually, and the fractionalization allows for multiple benefits down the range. But obviously, we know where the regulatory is, and we know where the market is, and neither one is necessarily at the point where we're able to actually trade digital assets. So we will get there at some point, but right now, and the reason we're focused where we are is we're trying to solve real problems and solve real problems with the technology, with standardization, with being able to prove certain things, and so that's where we're really focused right now, with the eye towards tradability of assets down the road.
Understood. So let's cover the next thing that is really important for the audience to understand. What are the real benefits of the blockchain? You say we're trying to solve real problems, right, in the market. So tradability is one. We talked about that. Source of truth and I guess saving on tradability. That's two. What are other advantages and problems you're solving with the blockchain?
Yeah, so this is something I talked about smart contracts earlier, about the data component and then also the functionality component. And so something we're working on right now, and I won't go too far into it, but we already have the data component built, right? That's what we're using that all the time. We have some functionality built in, but what we can start to think about is building a lot of the operational functionality of an asset into the asset itself. And what I mean by that is, if you want asset level reporting, we can build that into the smart contract. If you want, whether it's reconciliation, we can build that into the smart contract. We can build a lot of these tasks that take a lot of time, and we can build that into the asset itself. And that's, I think, the next piece of where value comes, because you can see, every time we update a smart contract, you can see that on the blockchain, right? So it's, even if we're adding functionality, you can prove it. Or we can prove that we changed it. We can show you what we added, what functionality we added. But we can continue to build these assets up so that they become, really, complex assets that are understood across the ecosystem, whether it's mortgage or auto loans, or some random loans in other countries. You know, they're in such a standardized format when we create them, and when we create this functionality, that easy to interact with. Right? They're more transparent. They're efficient because we're building that functionality into the asset, and we'll keep going from there. I mean, just as an example, you could theoretically have actual dollar payments go through the asset, right? The amount of time that saves from a borrower making their payment and going through the system and getting to the end portfolio in 30 days, we could do that in 3 seconds if we wanted to, right? Obviously, we're not there yet either, but that's another, you know, benefit of blockchain is, if we are in a situation where it's tradable and you can fractionalize, we can send one payment to the borrower into the smart contract. We know exactly who owns that loan. We split that payment into, let's say, 5 counterparties, deliver the payments right away, and it's done. And we have full reporting on it because it's standardized and we pull it off the blockchain.
Yeah, and in essence, I can tell you right away, all the diligence providers charge real money for pay history reviews, right? So we're talking about 30 to $50 per review, while this is automated with the blockchain, where all the issues with respect to skip payments, not having a pay history review, plus when you have multiple servicers, you sometimes don't have access to all the pay history. And in the smart contract, it doesn't matter who the servicer is, right? Because the data is fed back in the common format, and it's standardized data that actually gets into the smart contract, right?
That's correct. Yeah. Yeah. And I do want to be very clear. We're not claiming that we want to be a servicer. That's,
No, no, yeah,
I'm just throwing out there that those rails could exist through the servicers, and help servicers streamline their operations. Right. And like that would be a massive cost savings for servicers to implement this technology, because now have automated reporting, you have instant settlement of payments, obviously full history, and so and it's cheaper to transact than traditional rails. So that's just something I'm throwing out there as another benefit that we're not there yet, but we will be.
Yeah, that makes complete sense. And now, what I also envision, if there's far in the future, now we're talking about the future, if folks that have any influence on the property itself can actually push the data related to insurance claims, related to fire, related to any mortgage insurance. So things that happen along the way with the property can now be pushed, and now the smart contract not just becomes a smart contract for the mortgage, but also a smart contract for the property condition and for the mortgage and the property itself and valuation and the market around it. So now it's a buildup of sort of all the data points around to create a very comprehensive report that probably can be a golden element for the Wall Street to invest not just through the Wall Street but also internationally.
For sure. Absolutely. Yeah. And you bring up a good point with international. So I've had some conversations recently about international opportunities for markets that are, let's say, underdeveloped. And I don't mean the countries are underdeveloped. I mean the actual the market. So, like, for example, like, auto loans in certain countries, right? They're just they're not standardized. Reporting's a mess, data's a mess. And one theory I've always had is the technology, and especially what we're building, the way we're building it, is actually more valuable in markets that are underdeveloped, because the data and the documentation and really the way the assets are created, they're all over the board. There's no standard whatsoever. And if we can bring some kind of standardization into that market, what it does really on the capital market side is it invites large institutional capital from the US and other places into these markets, because now they have trust. Like they can go in and see the data. They can see the performance. I'll give you a short story, but back when I was at the hedge fund, we looked at some markets in Europe, and for example, like Italian mortgages, right? And the data quality was absolutely horrible. And so we basically said we can't invest in this because we can't tell our investors what we're even buying. We have no idea. The data is horrible, and performance, we have no idea. And so, like, just things like that, if we could bring the technology to those markets that are, underdeveloped, as in, not as far forward on the data and performance side here, then it brings a lot of value, right? And it brings capital to those markets where capital today can't trust
Yeah,
some of the information. It brings that capital to those markets, which is, valuable.
that it's a great point. And I remember a story, and I'll be quick about it. So one of my companies was hired to do diligence on the boxes from a credit union. And when we scanned those documents, scanned those, loans, there were, folders from credit unions with, you know, 20 loans in it, but only one was active and 19 was released. So the credit union was not very good in maintaining the files to show which loan is active. It was a complete mess. It was a guess which one is active probably by the date, but the document maintenance in non-custodian, non-standard custodian places is really a big issue, right? Because now you're guessing what's going on, and you're guessing which ones are released and not. And that brings me to the question: how do you maintain the released loans, right? So, what happens to the blockchain when the loan gets paid off, and or refinanced? I think that's a valid question to really understand and visualize on the progression of what happens after certain events.
Yeah, exactly. So we are recording payments on a daily basis today on the blockchain, recording, not actually transacting. And basically, what would happen is we receive information from the servicer saying that loan paid off. So we write the loan down to zero, and now that loan, it still exists on the blockchain. It always will, right? That's the whole immutable piece. But we'll have the last transaction that says that loan paid off, and this is the date it paid off, and this is the proof that it paid off. And so the asset will still exist, out on the blockchain, and you can go back and then prove at any point the entire history, the entire pay history, the data, the doc history, all of that will still exist, but the loan will show a zero balance.
Okay, the new loan is a new
A new asset.
entry, right? New
Yep.
blockchain entry to the journal. Okay, so that makes sense. And this way, if the loan is paid off, and in my example, you have 20 loans, 19 will show, there's paid off on all 19, or the payment history shows that, you know, uh, the borrower paid off, or the refinance transaction paid off the prior balance. The balance is zero, and therefore it's easy to decipher that based on the blockchain, the loan value or the loan, this is active and those are paid off. Okay.
Correct. Yeah, and if we have knowledge of who the borrower is, we can connect the borrower to both of those loans. So if it's a refinance, we can actually connect the borrower to the initial loan and then also the new loan as well. And so that would, for a borrower, keeping track of their entire loan history in basically one borrower account is beneficial, right? It's definitely beneficial for lenders, where lenders can go back and say, oh, this borrower has had 5 different loans over this period of time, and we can see their pay history, we can see everything. That's valuable. And for consumers, for borrowers, they should offer, or they should ask for a lower rate because of that, right? If you can see a consumer's entire history of payments over 5 different loans, maybe they're different types of loans. Maybe it's an auto loan, maybe it's a mortgage. At the end of the day, if you can provide that information, the consumer should have, the borrower should have the power to say, I'm going to give you all this transaction data, but in order to do that, you need to reduce my rate by 50 basis points. Right?
Okay, this
Theoretically,
is
I'm not saying this can happen.
yeah, no, but this makes sense. Now it will compete against what FICO does to a degree, right? Because if I'm the borrower and I had a great payment history for different lenders, if I authorize the new lender that I will refinance with to access the prior blockchain to show that the payment was on time, then there's a trust on the new lender to say, yep, I believe you. There's a provable payment history for all the prior mortgages, and therefore I will give you better rates, or I will qualify you for something that, I would use FICO score for. And, certainly the need for the FICO score will sort of not be as great as now.
Well, I mean, FICO's not going to go anywhere because it's a trusted resource, but this, you have not only the payment history, but also have the data as well. So you have the data for all 5 of those loans. So if you wanted to be able to track that, technically could. And so for a lender, just it increases the ability to trust a borrower and to underwrite that borrower faster, hopefully, cheaper, hopefully. Um, and therefore that savings should be passed on to the borrower.
Well, absolutely. I think the speed will be phenomenal. So, in other words, you have the instant verification done on the borrower, and how, what is the risk level associated with that borrower, and then instantly is available. Did the borrower have any bankruptcy, foreclosures, deed in lieu of foreclosures, anything that's, FICO or prior credit history showed, it's going to be on a prior blockchain, and that's instant to the lender that's trying to approve the borrower for the mortgage. I think you can all you can think about instant pre-approval process if the data is available.
Absolutely. Yeah,
Okay.
absolutely.
So one more thing I wanted to touch on, because you said it and I kind of left it alone. The standardization of data, right? So do you see that the need for, say, mismo to step in and standardize the ledger itself, or sort of you're in the forefront of definition? Is there anything that's going on right now in MBA to define what those data fields are, or you still think that effort should be started?
Yeah, so I mean, obviously, Mismo has their standards. For us, it's more about what the investor wants, right? As far as data goes, some
Yeah.
investors don't require Mismo standards, some do, and so really, the way we built it is flexible enough for the investor. It would be great to partner with Mismo. We've spoken to them before. Um, you can go to partner with them as a standard. The only problem is, some of our investors don't use those standards, right? And so it really, becomes a chicken or egg problem where we're bringing the standard and putting that on, some standard putting that on, or you know, or our investors, they're gonna have to say, okay, we'll use some standards or not, and then we're butting heads. But we made it flexible enough where we can use you know a standard Vismo file. We can use an ASF tape, which is a standard securitization tape. We can use anything.
So,
Like we can import anything.
okay. And that's a good point. If you key off the blockchain of ASF tape, which is pretty standard for all the rating agencies, I think that's a good starting point because it's already a standard set of data that everybody else is using. It's well defined. It's old, unfortunately, too old for my liking, but we have to deal with it. At least it's a common starting point for organizing the blockchain post verification of the law. So
Right.
completely agree with you. Um, so now let's switch to some of the headwinds that you see on the market in implementation or deployment of the blockchain. To me, it sounds like a no-brainer. Everybody should do it, but they're not. What's stopping them from starting with the blockchain, at least running pilots, um, running portion of their loan portfolio in blockchain? So what's stopping the whole momentum?
Yeah, it's a great question, and something we obviously are trying to figure out ourselves as well, because we hear the same thing. I had a conversation with a firm 2 weeks ago. First time I've ever spoken to them, said this seems way too obvious to not use. And I got the same question: why are people using it? And it goes back to, yeah, I hate saying this, but people are just busy, right? They're busy on focus on what they're focused on right now, right? If your line of business is securitizing loans, have that process in place now. Why do you need to change it? That people think they're generally pretty efficient, which they may or may not be. And people are just have their own processes in place right now where they're unwilling to take a step back and say, can this actually save me money? Right? Can this save me time? And that's really that's what we have to do. Like, we have to prove that to people. And that's literally all we do is try to prove the value, prove the ROI to the end user. And once we can do that successfully, we've done that successfully with some clients, is, that's going to be the driver. And the second piece of this is that may be for the first few clients, for the first few additional clients. The next piece, though, is market adoption. So this is the way our market's always gone. Start with a couple people that are way ahead of the game, get some more that are a little bit behind, and then all of a sudden you're at this tipping point where the entire market is saying, I have to use this, right? I have to. So somebody actually told me this years ago, like, your adoption curve is not a hockey stick. It's 0 or 1, because you're going to be at 0 for a while, and then you're going to be at 1, because everybody's going to have to do it, right? And really, I think the biggest forced adoption would be the GSEs. That would be the
Yeah.
biggest forced adoption. I mean, obviously they own the market. So, um, yeah, but we're talking to people all across the board. And to my point earlier, like, we have to prove ROI, and that's really all we do.
It's interesting. To me, it sounds like a no-brainer as well, right? And it echoes what Ginnie Mae wanted to do, right? So Ginnie Mae last year, I think, they really wanted to have a push for transparency of investment, implementation of blockchain, cost reduction, which it sounds like it'll give cost reduction to a lot of processes and ability for transparent investments from the international counterparties, right? So I think that was a big push, and I think it was announced at annual NBA or I don't remember the conference I attended. So the your technology really echoes the same push by GSCs or GNMA for that matter. And it sounds like if the push comes from GSCs, the adoption will become one right away, right?
Yep. Right. Exactly.
Okay.
Yeah.
So
We focus mostly on the non-agency side, mainly because the markets are not as standardized for one, but also a ton of issuers that are focused on better execution, right? Focused on making their processes more efficient, um, and also just getting into the GSEs generally for even for a pilot is tough, right? And so we focus on, I'll call it lower hanging fruit, but the non-agency market where obviously I have relationships there, our partners have relationships there, and it's really an easier market to tackle, at least to begin with, right? And the thing is, I think as the GSEs start to or Jenny start to see what we're doing, start to see the cost efficiencies, um, I think they'll come over to our side and say, okay, this seems like it's real now, right? People are waiting for blockchain generally. People are waiting for, is this real? And we've onboarded $8.5 billion of loans. It's real, like it's live. This is not a pilot anymore, right? And so I think the more we can get that story across, then we get other issuers on the non-agency side, loan holders generally, then eventually banks and the GSEs.
understood. Now let's comment on the timelines, right? So if I'm the lender and I'm looking at our podcast and scratching my head to say, well, I really want to look at this more. First, what I need to do is evaluate how long will it take for me to go and set up with liquidify mortgage. What would it take for my folk to adapt to the new system? And the time frame to go from the engagement with Ian to the production on when I can see my work with blockchain. So can you comment on the actual timelines and what would it take for any lender to jump on a platform and start using?
Absolutely. So on our side, it's very straightforward. So to create the digital assets, to add the data, to add the docs, we can do that all via API, and really it depends on the lender specifically. If the lender is tech forward and is open to using APIs, it's a very fast implementation. I'll say 3 to 6 months, right? If if the lender's not, then obviously we'll have to figure out most likely spreadsheet onboarding, right? Which is we already have today, so that part's easy. Connecting to the servicer is usually the longer the longer piece of the onboarding process. But basically, what we've told servicers is give us the data any way you have it currently, right? We'll figure it out on our side how to get that information onto the blockchain and make it as easy as possible for servicers. And we do the same thing with lenders or even issuers or loan traders as well. Um, for us, implementation is fairly straightforward. It just depends on on the lender, their use of technology, their systems. If we want to integrate into a system, that's obviously going to take a little longer, because you have to change that system. And so it really depends. But implementation from our side is very quick.
Yeah, so in my mind, you will run the parallel processes for any lender, their current workflow, and then the blockchain workflow, compare the results, and I guess after another 3 months trial, shut off whatever's less efficient. And
Correct.
just to your point earlier, um, the reason why people don't change or don't jump on blockchain is the economy is shrinking, right? So they have staff that they have to worry about being occupied for the shrinking economy. So they don't want to change when it's not broken and the staff is underloaded, right? It's really for folks that are still struggling to make money, right? To originate loans at the profit or not the loss. I think it's obvious, right? So you really have to look at the advanced technologies to see if um, there's more efficient ways to save money, to be able to be cash flow positive on the loan origination, and at the expense of the staff in my mind, right? So if you have a staff which is underutilized and you're just dragging things along and using the same old processes, I think it's less efficient than jumping on this technology, understanding it, and then realizing the efficiency and savings with the blockchain.
Yeah, and this is a hard thing for our industry just generally is, you know, it's typically it's the opposite of the business model is the opposite of what it should be, right? If times are slow, so obviously now rates are coming down, so lenders are getting busier, but in slow times, that's when you should be investing in profitability, right? You should be investing in technology that when the market turns and you become extremely busy, you already have these processes in place. You already have the new technology in place. And instead what we do is, during market troughs, we say, oh, well, we don't have any money to invest in new technologies, so we don't. And then when the market picks back up and you're basically a market froth, everybody's too busy to implement new technology. So that's part of the origination cycle and why there's not that much investment on the origination side because you're too busy or you don't have the money. And that's, it's unfortunate, right? Because that's exactly when you should be investing is when, when things are slow.
Yeah, I agree with you. Now this is going to be an issue that people will raise all the time, and I'm sure you hear it every time, right? Uh, Blockchain is a accessible element somewhere on the web, and anybody in the world will try to break into that element, try to unlock it, try to find what's going on, and let's touch on security and the access to each asset because that's going to be number one issue that every lender will worry about to make sure that the data is safe.
Yeah, no, it's a great question. And obviously we get this all the time. And so I would say two different things. One is, so there are two types of blockchains, right? One's public, one's permissioned, and there's also a hybrid model. And so one thing we're looking at right now is the hybrid model, where you can have certain elements of the blockchain public, where you can see things, and certain elements like data and documents that are private, right? And that way you restrict access on the blockchain level to certain things while providing the transparency of the public market, right? And so, I think generally when you talk about assets being on a public chain, then yes, people are going to try to, get into the assets, try to figure out what the data is. Everything we do, so we don't put any raw data whatsoever on the blockchain. Everything is encrypted and hashed, and that's the way we can, we can safeguard ourselves from people accessing that information, right? And then obviously we hold everything on our side off the blockchain to be able to decrypt and basically confirm the data. And so that's something, from day one, we've always had the philosophy, if it's on a public blockchain, there's no way you're going to get access to that data at all.
So it's sort of a dual security, right? First is the hash to get in, and second, encryption of all the data fields.
Exactly. Yep.
Oh, okay, that makes sense. So that makes me feel pretty good that if somebody wants to get a possession of the AI data on the blockchain, it's pretty much impossible with the current encryption algorithms and the hash tagging or hash key that only owners will possess.
Yep, exactly. Yeah, and just for public knowledge, like you can't go from a hash of data back to the data. It's impossible. You have to go in the other direction. So you can only go one way. But you can prove it the same way, right? Prove a data point because you rehash it and compare it to what's on a blockchain, and that's a way to prove what you have. But just to clarify that, you can never go from a hash key basically back to the actual data. So even if it's sitting on the blockchain as a hash, there's no chance you can go back to the previous data.
Makes sense. Okay. Couple of more topics I wanted to touch. So first is investor reporting, right? So investor reporting is in some services it's a big issue. Why? Because it takes time. There's always delay, inaccuracies, Uh, and one of the servicers claimed that they have instant investor reporting, right? By instant, I'd say, it's available over API. So, how does investor reporting work in the case of the blockchain? And is it instant as well? The reporting structure, can you comment on how that element makes the blockchain very attractive?
Yeah, absolutely. And this goes back to something I mentioned earlier on the functionality of a smart contract. So
Yeah.
we can actually build that investor reporting into the asset itself. And so what I mean by that is we can actually build a function into the if we have this, but you can build it into the asset that says, give me all the pay history for this loan, right? And basically what you do is you ask the asset on the blockchain for that information, and it returns that information to you. So it'll give you the full history of payments, and you can now start to aggregate that and report at the portfolio level. So obviously, so ownership of assets on a blockchain is also recorded. So not just in the docs, but whoever owns that asset. We can tell exactly who the holder is. And so what we do is we build portfolios and we put the loans into the portfolios. And the reason we do is then you can report on the portfolio level, and the portfolio can also have that same functionality. When just say, give me the cash flows for my entire portfolio, right, by asset, and that's something that it makes investor reporting extremely easy, especially on the payment. And then also, if a single portfolio has multiple servicers, which happens often, and people are tied to one servicer generally, all the data is standardized. So if I ask the portfolio for all the cash flows, it's going out to the assets. It doesn't care who the servicer is. It's pulling all that information up. It's standardized and it's aggregating. And you now have a standardized data set across multiple servicers when, typically investor reporting especially for like a securitization is challenging because you have to go to each servicer, map the servicer fields to your fields and do that for every servicer and then aggregate and then report, right? This gets rid of that entire step where you just ask the portfolio on the blockchain, give me all my payments.
Not only that, it's I can see the big implementations of for GSEs as well, where GSEs require a uh, a different funds on Wall Street that buy GSE loans to comply with the certain requirements and guidelines of how the loans are serviced, and then they hire a third party reviewers or diligence providers to review what happens a year after, 2 year after the sale, or 3 year after the sale. While that is no longer needed with the blockchain because the investor reporting will give the GSEs this data, and they can instantly give credits to future purchases by the same parties that complied with the same guidelines of that tied to the loan. So that's very powerful to close the loop on how the data can be used going forward by GSEs.
Exactly. Exactly. Yep. Yeah. Portfolio
The,
reporting is a huge piece of this.
Yeah, and then the second point that I wanted to make, and again, as you know, I own 3 companies. Anytime the transaction happens from one party to another, one investor to another, there's an event of ownership change or custodian change of um, on the blockchain, and that can trigger the event of reporting the assignments in the county offices with the blockchain QR code for anybody to sort of scan it in and go to the actual blockchain if they have the permission to see that the entity owns that loan, and then they can transact if
Exactly.
this information is public, I believe, right?
Exactly. That's correct. Yep.
Yeah. And the final note is the other company, the AI company that we talked about before, can really uh, play into the data validation cycle of how to verify before the blockchain is created, ledger is created, how to verify that the data from the documents to the chain is a source of truth to make sure that everybody can trust it and they can verify it and there's a link to it and they can actually see the documents. So there's a lot of things that I think both of us can work on and create the pretty much state of the art system for the market to take advantage on and realize all the savings that we discussed on the
Absolutely.
podcast.
It's huge. Absolutely. The AI component of of what you're doing, and then the additional AI component of what you can set on top of all of our information that's standardized on a blockchain, right? Makes it easier for models to learn. So I think that's huge as well.
So let's, before we end the podcast, I really wanted to pick your brain with a crystal ball on the future of AI and the blockchain. When do you see this to become mainstream? What else is needed to make it sort of a this future a reality for today's implementation of all the workflows?
Yeah, so I think, I think it's education first, educating the market on the value, as I mentioned earlier. What is the true value of what we're doing? I'm going to save you time. I'm going to save you on cost. But then, using things like overlaying AI onto totally standardized data allows for faster learning, allows for more for additional solutions. And I'll use as an example. So let's say you have all of our standardized servicer data, right? It's on the blockchain, attached to each asset. What you could do is you could actually set AI models on top of a blockchain, with obviously to know which assets are loans, right? Which if it's a private blockchain, since it's do because your whole private blockchain is loans. But you can set AI on top of the blockchain itself for payment issues, right?
Yeah.
Is this borrower struggling? I need to reach out to this borrower. They're constantly getting later and later on their payments. Like, let's go help that borrower before it's too late, right? Certain things like that on the servicing side would be very valuable. Um, but obviously we need more data and we need more payment histories, and then obviously I'll leave it to you on the AI side.
Yeah. And I wanted to give an example. I did promise to mention his name. So, our mutual friend, Kate Thompson, with Rocktop Technologies, is actually implementing what we're talking about. And he is building a AI-based doctor data, valid data, integrated with payment history and servicing comments. And that creates a sort of all in one verification module that any lender can use: forward, reverse, commercial, HELOC, second liens. And that, in my mind, is very, very powerful because all the elements that we just discussed is maintained by this sort of combined module that can be translated further to the blockchain and become that reviewing element that we talked about, right? So somebody that's verifying semi-automatically, automatically, or by human, a a source of truth across all the elements that funds care about, right? And I think this is super powerful. And if I can get Cade on podcast, I'll be happy to pick his brain as well. But I think we're both a part of that ecosystem that allows people to create those type of implementations to be used across the industry.
Absolutely, yeah. And one thing I'll highlight there too, is as we start you know to combine some of these functionalities, whether it's AI, blockchain, or really anything else, really the end goal here is on the borrower, right? And so like the
Yeah.
borrower essentially picks up a lot of the costs of the loan over its life, even if they may not know that. Whether that's through the interest rate or through origination fees, mostly through interest rate. And if we can get the ecosystem, smooth enough and transparent enough, efficient enough, really, you know, the whole goal here is to get borrower costs down, right? We get borrower costs down, we speed up timelines. So a loan doesn't take 60 to 90 days to trade. It can trade in 10 days, for example. If you do that, really what happens is you start to increase the velocity of capital throughout the ecosystem. And what that means is more lending, right? More lending to all borrowers, right, across different products, and that's really the end goal. Like this, we're doing this mostly for we're trying to fix the infrastructure, but we think the end goal here is this should all help the borrower, and that's really the key.
Yeah, absolutely agree. And I see huge savings to the borrower, velocity of money, like you said, and this is changing the 50-year-old industry with stare and compare and paper to completely new approach of smart contracts, blockchain, and instant data availability. And I think this is a huge leap for this industry. And whoever does not adopt will stay behind, just like in the AI evolution. The blockchain smart contracts, in my mind, is the same thing. You have to be investigating it, implementing it, and then figuring out if those efficiencies are right for the business.
Yep, exactly. 100%.
All right, Ian, again, I wanted to thank you so much for coming to the podcast. I think it was very in-depth discussion. And for whoever listens to my podcasts, I always go in depth because to me, I need to visualize the system. It's I think this system is perfect. And if you're listening to this podcast and if you have any questions for Ian, how can they get in touch with you?
Yeah, you can actually go ahead and email me if you'd like. if@liquidfi.io.
Sounds good. Ian, again, thanks so much for the podcast, and I'll keep in touch with you throughout this cycle.
Alex, thank you so much for the opportunity. I appreciate it.
My pleasure. All right,
All right,
take
thank
care.
you. All right.
Bye.